The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As every day, well, let me put it this way, every trading day, we come and meet at this time.
The following takes place between 2 p.m. and 3 p.m.
We've got a market that's up slightly. It was up a little bit more. It was up another 6 S&P points, but we're up 6.5 points on the S&P cash right now. This is pretty much where everything has told us, at least told me, from options and looking at other things where we're pretty much where we should expire on Friday. Now, that may change, but for the most part, I suspect that most of the fireworks this week are already over, and we're going to see a lower volatility into Friday. This may be one of these days where we get all the action that's going to be on Friday. So I'm holding my paper, or my powder dry. I don't suspect that there's a lot of reasons to get ahead of trades, probably more than Wednesday. Got a lot of earnings coming out this week, and we'll talk about some of those that came out this morning and last night. But for the most part, I think we are in contracting volatility, not expanding volatility throughout the end of the year. We'll explain that. And in the meantime, we'll get this party started.
That it's all just a little bit of history repeating.
On this day in 1970, Stanford Research Institute, SRI, scientist Douglas E. Engelbart obtains a U.S. patent and for his XY position indicator for a display system, which we now know as the computer mouse. Some of the people that have listened to the show for a while will remember when I've talked about a videotape that showed in 1968 literally everything that Apple, when it came out with its Macintosh in 1984, mid 84, said that they had invented. And my comment to Steve Jobs then and now is kind of what my grandmother used to say, which is the guy used to rather climb a tree and tell a lie than stand on the ground and tell the truth.
You're telling me a big fat lie.
Well, he was. He said that he invented all this stuff. Claimed that Microsoft ripped him off. Of course, we show that he went to Park Xerox where he copied all his stuff. And, of course, they copied all their stuff from Douglas Engelbart. And there's a famous videotape. I can look it up and give you the link for it that shows literally everything that we're doing now with computers pretty much was done in 1968. Some of the newer stuff, pins, point and click, moving things around were invented literally for movies. And for some strange reason that only lawyers can twist into a knot, nobody that I know of doesn't credit Minority Report for a lot of what we have in interface design now. In that movie, they showed moving a lot of things around and sizing things by literally touching a bigger screen or an invisible screen in front of somebody. And you know what? They say that that's not prior art. And to me, if there's anything that's prior art, it's some science fiction movie where someone predicted something 10 or 15 years into the future. But what else can you say? I just, it always sticks in my craw where everybody says that they do not stand on the shoulders of everybody before them, and somehow they invented something that no one else in the world thought of. And the reality is that there's very few new things under the sun, my Horatio, and we shall continue on. Anyway, 2060 on the S&P cash. Volume is good at 2.5 billion shares. And we go next to lumber liquidators. Part due. The gentleman that was famous for uncovering the lumber liquidators issue with formaldehyde in literally everything. And we'll go back and tell my story about me and formaldehyde. But Tilson, his name is Tilson, he's got a big hedge fund, who, of course, started the big lumber liquidators, has been out looking for other companies that have a problem with formaldehyde, and they found one, they say. That is Wayfair. Tilson said that he had 5 items of Wayfair's furniture tested for formaldehyde, and of the 3 he received, results on 2 showed toxic levels. Doesn't say what those levels are, if they're above what the EPA would allow. But he said that they're being sold on websites like Walmart, Kohl's, Staples, and Shop Your Way. These are more discounted sites, and my guess is if you tested all that stuff, it'd all be from China, and it'd all have huge amounts of formaldehyde. I had a pretty decent, still do have a problem with an allergy to formaldehyde, and I have probably one of the most intelligent rear ends in the world, because if I sit on plastic that had formaldehyde in it, it starts to itch. And I famously tell my story of having to sit on a towel through high school because all the chairs they had, the plastic had formaldehyde in it, and would instantly turn my rear end rather a beady red from sitting on it, even through jeans and everything else. Back then, I have a feeling that plastic was made of nothing but formaldehyde, but it would make me itch to no end. But thank God they got rid of it in most chairs, and I don't have to go around. And yes, somebody jumped to it before I get to it. Yes, I have a smart ass. Anyway, other things of interest out here. We've got, I've got something very interesting to play here, if I can remember where it is at. Oh, there it is. But brought this up a little after noon. We started seeing Herbalife and GNC and vitamin shops all getting hammered very hard. The reason is that the federal agencies will announce both criminal and civil actions related to dietary supplements today at 3:30. So if you are around, probably in the middle of Tom O'Brien's show, we'll get names. What hasn't happened is they didn't name names. And so, as common on Wall Street, they took a shotgun and just shot it in the general direction of anybody that has anything to do with this. We don't even know that these public companies are involved in them. I think, unfortunately, in New York City, probably hard to keep a lot of this secret. My guess is that Wall Street firms knew almost immediately or thereafter and started selling hard. But all 3 of these could bounce. All 3 of these could go into the toilet in a matter of seconds when names are being named. The reason why: civil actions, no big deal. Criminal actions, that means that literally an entire company could come down on this. And the idea is that maybe it's the advertising fallout from the original short in Herbalife, although Herbalife wasn't moving that much as GNC and vitamin shops earlier when I was looking at them. But it made me think of one very interesting spot from one of my favorite guys, and of course, that is Sheldon on The Big Bang Theory and his treatise on expensive pee.
Oh, boy.
What now?
Well, there's some value to taking a multivitamin, but the human body can only absorb so much. What you're buying here are the ingredients for very expensive urine.
Well, maybe that's what I was going for.
Well, then you'll want some manganese.
And that's it. Of course, like you said, there's probably not a lot of harm it can do if the vitamins are good, but for most people, it doesn't do a whole lot of good to take something that makes expensive pee. Amazingly enough, of course, one of the astronauts that should have been or might have been actually going to the moon had some severe problems with vertigo, and he credits taking massive amounts of vitamins to making that vertigo go away and eventually going to the moon. I can't remember the name of the astronaut at this time. But for the most part, taking very small amounts, trace amounts of vitamins are probably all you need to do. And this may be a lot more honed in to what some of the people in the den were talking about after we talked about it, was that Dr. Oz and some of these other guys that have been out making wild, unsubstantiated claims may be in the crosshairs for this. It's very hard to tell. Now, you can make claims if you can back them up. Now, the problem is most people don't want to make claims because they'll have to do a double-blind study and get it past the FDA and make a bunch of other claims. Of course, there's two things. People that on the side that are anti-vitamin would actually say something like, well, they don't do any good whatsoever. And the other people would say, you're trying to shut it down. Just Big Pharma wants to shut everything down for supplements. And I think probably there's a tiny amount of truth in both sides, but not a whole lot. I remember my dad was big on the NutriVitamins, those green ones that came in the kind of a green thing, and he took them all the time. I used the containers all the time to put small parts in. But I don't know what else you can say. We're going to see at 3:30. Look for fireworks then, because if some of these people are lucky enough to not get shot with the shotgun, because most of the time the Justice Department goes after people with rifles. They don't just shoot in a general direction. Probably a couple of these people are going to skim out, and maybe none of these will be hit. But at the same time, probably a lot of stretchers going on like Dr. Oz was making in this sector. Yellen doesn't need any help from us. And of course, if I talk about either the Fed or Yellen, it requires me playing the new theme song. Janet Yellen, you were We'll be back in a minute. We'll talk about what she has to say.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alan Shepard. I couldn't remember the pilot's name. Thank God for Google. I just popped it up. I think the Wikipedia page is wrong on him, too. It says it got it surgically fixed. I think he got it surgically fixed, and it still was a problem. And he ended up taking a bunch of vitamins that got rid of it. But I guess the deal, I want to say Meninger's disease, something like that, that causes crystals to build up in the inner ear. We're up 3 or 4 points. Like I said, I'm not expecting a great deal. And we're going to get into why I don't think that there's a great deal going to happen before the end of the year. Got a question in the den, which I'll answer, which is, when are we going to get a 20% correction in the indices? And I'll answer that later in the show, too, because it comes along. But I'm going to show a new kind of a chart, one that I've never seen before. Maybe someone's done it. I've searched and searched and searched for 15, almost 17 years for something that would do what this one does, and it's going to be extremely subtle. But I think you're all going to be interested in it before the end of the day. And I want to thank Steve Rhodes for kind of giving me a little push maybe a week ago by asking a question, and I kind of stumbled on an answer to that question. Wasn't the one that he wanted, but it was one just the same. But we'll do that. Anyway, we were talking just before we were so rudely interrupted by our commercials that actually pay for all this, so maybe it wasn't rudely. Yellen came out today, and of course, she said this. Basically, she doesn't want anybody overlooking the Fed. Nothing can happen. But interestingly enough, a bill has passed both in the Senate and in the House, and it's going to be on at least the committees that would require the Fed to adopt a policy rule and be monitored by the Government Accounting Office. Of course, she's calling for all kinds of things, blood running into in the rivers, and toads, and welts, and death of all the firstborn. If anybody were to pull back the curtain and see who's behind there, and what they do, and how they spend their money, I can't believe that any agency that is chartered by the U.S. government shouldn't have at least some oversight. Ideally, of course, we've got three parts of government that are equal. I don't see why we shouldn't have a Fed that isn't at least have a little bit of light put on it. What happens if they decide to spend all the cash in the world and then tell us later, oh, here's the bill? I think we should know up front. Now, she says that would have ruined everything. I just wonder how, if you found out that there were a bunch of sweetheart deals that went back for years, if they wouldn't look pretty horrible out here, because you got to think that there are a bunch of sweetheart deals made because, of course, they work for the banks. They don't work for the U.S. government. They don't work for me and you. They work for everybody else. My guess is this is going to go through. Unless we see some kind of veto threat by Sir Obama, that is looking to me like it is probably on the way to becoming law, and probably a good thing in the future. She says that literally there were no laws passed that would give them the right to do everything that they've already done. Therefore, if anybody could see what they were doing in near real time, that people would stop them. And it seems to me a very, very tortured argument to the point where nobody gets to look at what they're doing, or the men behind the curtain, if you love that Yellow Brick Road reference. And of course, last, before we go to the break and we start talking about shorts and short interests, which may take up the rest of the day, and I think it'd be interesting, but I want to talk especially to my subscribers that are going to start seeing charts like this a lot more. France's Air Liquide SA is in talks to acquire U.S. Pure Air Gas to significantly expand its position as supplier of industrial specialty gases. If you keep your eyes open while you're on the road, you're going to see these tankers that look like gasoline tankers filled with nitrogen and hydrogen and everything else. I would hate to see that France buys them, only because watching the stock price has been a good indication of what's going on in industrial America. A lot of times these chemicals are needed in mass to do a lot of things, and I would hate to see them go for that reason alone. They are my canary in the coal mine.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I want to talk today not about specific stocks so much as a general theory of shorting. And I think a lot of people are confused. I kind of wrote about it in the newsletter this morning. And I had a couple of picks. One really rocketed today. But it gave me a lot of clues, or my new data does. If you missed the show yesterday, I've finally come upon a source that isn't easy, but can be constructed and inferred back as short volume as a daily basis in the stock market. The data kind of can be had, and I think one of my cohorts here asked about it last week, and he told me that it was $2,500 a month. I'm pretty sure it was a month to get this data. But if you're watching on Tiger TV, I just had a clip in it in one of my annotation programs out here. But I've got the S&P 500, and if you look at the bottom, I'm using both only the short volume for each day over the last 6 months or so for a chart. So this is not the long volume. This is just short volume. And actually, we can bounce back and forth between them. Let me get them both to the same size here. Roughly the same size, I guess. Is that it? Why was that one bigger than that one? Don't know. But it will be slightly different. This one's the S&P volume. We've had energy up from the lows. We tested our lows with lighter volume. We've continued up. Energy was very good from the lows, and this is using standard volume. When we look at actually the short volume, it was never all that exciting on the way back up. Of course, most of the time people, let me put it this way, 90% of people that short, or that, let's back up one second. 90% of retail traders will never place a short order ever. If they're in the market 20 years, they will not short stocks. This makes it almost the provenance of short selling of the street and the big men of the street, hedge funds, ETFs, people that are hedging against other systems. So they're constantly buying and selling and shorting stocks altogether. But I guess the story I want to tell is a lot of people just do not understand, at least what I think I understand, which is that there's a thing called being too short for conditions. And those tend to be times where I've been brutalized in the market in the past because I didn't really understand how that worked. But if you short a stock, literally you're adding to the amount of shares available out there. So if there was 1 million shares in a float and you short another 100, literally there's now another 100 shares. Now, if you have to cover those, suddenly they're less than 100 shares. Now, there's a lot of games, of course, the hedge funds and men of the street play. One of those is that you have to be in a margin account, and they basically say, you know, you can have margin during the day if you just move all these shares of your stock to a margin account. And, of course, the idea is that eventually they'll make money off of you for that. But they can also lend those shares to other people even when you do not short. So there's nothing more than the retail business out there, retail trading business, like all the ones that are advertised. Love to see is somebody that never shorts because they can charge others for those shares. But again, it's not a static issue. When you short a company or anybody shorts a company, literally there are now more shares in the float. When you take them back off, suddenly there are less shares. And of course, if you move shares in and out of a margin account, literally those shares have to be bought back and come out of the market in the next day or two. And so there's many times where you will find, especially CEOs, I've seen it, well, they know that they're 40% short. And what they will do is the people that are long their shares will ask them to move their shares out of the margin account and into a standard account. And by doing that, suddenly a ton of shares have to be bought pretty quickly. Now, the SEC and most of the organizations has taken a dim view of this, and we haven't seen a great deal of it in the recent past, but it's still not illegal from what I understand. So we may still see one of those days where you see it. If you do see it, run real quickly, get your shares that you are short and out, because it has been a tremendous way to go back and club folks. And of course, all the companies out there that have used share buybacks have also used it to cause short squeezes in their own stock. So we've got a few things, but I wanted to point them out here in the chart as we talk about shorts and shorts in the market. What we have seen, and I actually showed it to Steve Rhodes, was that we've already seen, at least in the data that I already have for the last year and a half on shorts, that what you do see is the market falls the most and the quickest when there are natural buyers out there. Anybody that shorts has to buy those shares back eventually, and that means that normally not everybody's going to wait until the thing goes to zero. Even if a stock is getting hammered, someone's going to buy those shares back. They're going to think that there's a faster horse somewhere else, or they're happy with the amount of money they've got already, or, of course, the trade goes against them and they have to buy the shares back too. So not only does it reduce the price or the float when someone covers, but of course that means other people probably will start having to cover their shorts, which means even more have to cover their shorts. And that's why you can see such huge and fast moves in a market. I'm going to give you an example of that today. It was in my newsletter this morning. Unfortunately, it moved so fast that even I couldn't get a buyout for the newsletter readers today on it. But it looked like one of the best ones out there. I was hoping that it would give me until tomorrow to go get in it. It didn't. It ripped today. But we're going to get into this. But what I want to show you in this chart specifically is that almost always the pros in the stock market are not going to pile in short unless they know absolutely that the stock's going to fall apart the next day. They know exactly that if they start shorting heavily, then everybody else is going to figure it already out, and they'll start shorting. And of course, it will drive the price down before they're able to short higher. So almost every pro will go in there and they'll work it out. They won't have huge shorts, but they'll get short maybe a little bit before they need to be. They won't do it all in 5 minutes in the morning. They'll do it across the day. They work very hard. Just the opposite for the retail trader, who's almost always a sign of a bottom by shorting right into a bottom. And if we go back and look at the August 24th lows, you'll see why the thing ripped so quickly. If you remember me talking about it during those days, I think I went on for 3 or 4 days showing stocks that were testing lows with incredibly light volume, which was also another good sign that, of course, everybody had gotten as extremely bearish as they could. But the difference between pros is they short at the top, and you really don't see a huge influx. People that have to short at the bottom are the ones who they believe that the end of the world is coming, and they dive in, of course, almost right to the point where the bottom comes in. We actually had 2 heavy days of shorting as the market did fall apart, and then, of course, it never went back down to that low, at least in the SPYs so far. But you will continue to see it. Now, what you also tend to see is the smart money reshorting on a bounce. In this case, that was that bounce back up to 201.86. And you'll see there were 2 huge days where everybody got short. And what the volume doesn't show is them covering. But it certainly shows the second low back here at 186 without a bunch of people diving on the grenade saying the end of the world was coming. Probably a pretty good indication that everybody that had wanted to get short got wiped out the first time for the retail clients. We had the pros coming in here the second time. And what did they do? They shorted at the highs. They didn't pile in at the lows. On Friday, we talked a little bit about why I thought there were 2 good indications that we would come out here somewhere around this mid, I thought 2040 to 2060 area, which looks like a pretty good setup. We're off 4 points now. But my guess is that we're going to probably bounce around in this area through Friday. But what we have again on Friday, they just can't help it. They got to dive on the grenade when the market's almost ready to drop. There was somebody in the den that was asking me Friday of what I thought was the VIX going to come down as people sold in basically at 1 o'clock when options normally start to roll over. And I said, yeah, a little bit today, but probably hugely on Monday. And that's exactly what happened. Everybody came in. They had to get short. They had to pile in. And again, they weren't shorting at the highs. They were shorting at the lows. And almost a good sign that you're going to get a huge and massive rip the other way. Wanted to talk about another stock out here that did rip today, and one of the first ones I popped out here that actually came up on a big rip. Where's my charts? Did I have them up? Oh, there it is right there. It was, like I said, this one moved so fast that I couldn't even get it out. I wanted to see how it opened today. It has pulled back a little bit, but this is not short volume, by the way. I only have that set up to do after hours. They don't publish it during the day. So I have to wait until about 8 o'clock at night before I start saying actually how many people shorted a particular stock or an ETF. And I have to run, and I had to build a database because it's separated in a bunch of different files, and it's off different ETFs, and it's also done as a daily dump. Very tough to deal with the data that is available for this. So it wasn't easy, let me put it that way. But anyway, Bluebird Bio was one. I wish I had the chart for it out here. But this thing ripped from pretty much the open and up. But not only, it's not just shorts themselves, but you want to put together everything out here. And what I said for the last few days was that there was probably a pretty decent low coming back in here. The buy pattern was pretty good, which is, you had this huge gap up on massive volume on 12/9/2014. So December 9th of 2014, 8.2 million shares. You kind of got into that with 8.2 million shares with similar volume. This thing, though, didn't really crash. It just kind of went sideways. And if I went back and looked at the volume, you would have seen that there were a ton of people shorting into yesterday. And I thought that maybe there were a few things out here. But then I go ahead and put that together with one of my other tools, of course, which is my work on options. And where's my little option thing here? And then you look at that and you go, okay, I see that a lot of people are getting short. It looks like we're probably at support. We're probably going to get a good rip. So what do options tell me out here? We are on the far cusp of blue. I mean, 70 would probably be the low where this thing expires on Friday. In fact, this thing could go up to 90. Probably not going to get there. Probably going to get somewhere halfway between. But this is part of putting not just a single thing together when you're going to see or try to jump on a short squeeze, but a multitude of things. Of course, I like to start off with charts that look like they're at support or at resistance. Start looking at the options in them. Now I'm going to have one more thing, one more quiver in my arrow, one more arrow in my quiver. Get that correct. With actually being able to see the other people's cards and actually determine what they are doing and how much volume they're doing it with. So I may be bringing a few more of these to the show, but I'm certainly going to be using these in the daily newsletter. And of course, I'm semi-famous for making some big expiration calls. Again, last time we had the IBB, and I kind of think that if I would have had the data for the amount of people that were shorting into the end of that expiration week, I could have held for even more cash than we made last time. And I'll be able to probably do that now. But anyway, ongoing short volume, I think it's going to be a big deal for me and my subscribers coming in the future. When we come back, we're going to answer a lot of questions that were in the den. And we'll finish up. And then we've got 2 hours of Tom O'Brien. And then my brother from another mother, Andy Heck.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We're off 4 points on the S&P cash, up 2.9 billion shares. My guess is that we're going to bounce around here in this area through the rest of the week. A little up, a little down. But I think the volatility will probably start shrinking starting tomorrow. We'll have to see. But it's going to take a big event probably to move this market before the end of the year. That means normally volumes will start to shrink, of course, and shorts will start to cover, and the market will move up. And, of course, making it the most vulnerable, just like it was into August, where you have these giant air gaps because nobody's short going into January. And my guess is the question in the den was, where's our 20% correction? If we're going to get it, it's probably going to come in on January 3rd or 4th or 5th, or at least start. Let me put it that way. My guess is it could be very much that way. But that, I think, was one question. What was the other question? Oh, the other question was... what did I think about Urban Outfitters buying a pizza joint? And the answer is no different than we've talked about before, like BlackBerry. That is, they'll do everything in the world to keep their jobs for the next couple of years at Urban Outfitters. They've figured out, or probably have figured out, that the only way to keep their job and to loot the company until it goes bankrupt is to drag it out as long as possible. We've seen so many companies do this. We talked about Radio Shack going broke into or right into last Christmas. BlackBerry is going to be next. It'll all seem like it was over way too fast. Sears is another one. We've got all these companies that basically have a scorched earth policy, and that is that, and let me put it, investors and bondholders at the end will get little or nothing. Of course, equity holders will get nothing. But what they will do is slowly keep hope alive with a variety of things. There's a company now that is selling used phones to keep their numbers up. And of course, you can keep revenue numbers up and fib a great deal about your profit for a while. And that is the smokescreen, and eventually those shares blow up. Angie's List, I saw turned down an offer for like $9 yesterday. That's been one of the other stocks on my living dead because it had been around for 15 years, never made a profit, been public for a couple of years, still hasn't made a profit. And the question is, who's got to be, I was wondering who's the biggest dope in the world. And I think it's those people at Angie's List are going to look much like they did several years ago when Yahoo got a great offer and had to wait 5 or 6 or 7 years to get their stock price yet up again. These things tend to be like that. And if you have a smart operator as a CEO, he can make these companies live for a very long time and frustrate shorts who know that the end is not changeable. And I think what we see in these retailers, at least in Urban Outfitters, is already the first part of a strategy to drag out their bankruptcy as long as possible. They will say, because they have a answer or will have a new strategy to save the company. That is rarely the truth. All it really means is that the CEOs get hyperinflated checks until the company goes bankrupt. And then, of course, they pay themselves some more to supervise the bankruptcy. But that's it. We'll see you tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien. Look for 3:30 for that announcement on criminal and civil issues in the vitamin companies. See what kind of movement we get there. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.